Consumer Credit Counseling Service of Buffalo Debt Management Plan. How does it affect my credit? My name is Stacey Waugh, and I'm a financial wellness specialist for CCCS of Buffalo. I counsel clients on the best ways for them to repay their debts. One of these repayment methods is called a debt management plan. A common question that I hear from my clients is, how will this affect my credit score? This presentation will cover an in-depth answer to this question. A debt management plan, usually just referred to as a DMP, is a partnership between you and CCCS of Buffalo to systematically pay down your outstanding debt through monthly payments. You would make one monthly payment directly to us, and we then disperse those funds out to your creditors each month. On a plan, you can include any unsecured debt, so credit cards, personal loans, medical bills, or collection accounts. There are several benefits to enrolling in a DMP. First, we work with your creditors to get you a lower interest rate. Depending on the creditor and the type of debt, interest rates are typically reduced to around 0 to 10%. We work with the creditors to make an arrangement for them to accept a lower monthly minimum payment from you, which ultimately puts more money back into your pockets on a monthly basis. Once enrolled in a DMP, creditors typically stop charging late and over limit fees, and you will no longer receive collection calls. Many would agree that the convenience of having only one monthly payment, rather than having to pay several creditors individually, is one of the biggest benefits of doing a debt management plan. But the ultimate benefit is that you will be debt free in 5 years or less. So here's the real question as to why we're here. How's this going to affect my credit? The good news is there is no direct impact to your credit by enrolling in a DMP, and there are no lasting negative effects to doing so either. You may see an initial drop in your credit score due to the fact that any account going on the plan would be automatically closed out by your creditors. If you had available credit on those accounts, it wouldn't be available to you anymore. You would just be paying down the balance. Additionally, if you include long-standing accounts on the plan, since those would be closed, it could shorten the average age of your credit history. The good news is that we do typically see credit scores increase within about 6 to 12 months of being on the plan, provided that you're making on-time payments both to us and also to any other credit obligations that you may have outside of the plan, like your mortgage, student loans, or car payment. Some creditors may report that you are enrolled in a debt management plan and paying through a third party. The idea of having a notation on your credit history may suggest to lenders that you are actively working to pay all your debts in full to the best of your ability. And it should be noted that this potential notation would be removed once you have completed your plan. DMPs are designed to be paid off with regular monthly payments over the course of your plan, and these timely payments will ultimately have a very positive impact to your credit because you're establishing a positive payment history over the period of up to 5 years. Now, here's a breakdown of how your FICO score is calculated. There are five main components that make up your credit score. The first one is payment history, which makes up 35% of your score. Timely payments on a DMP will have a positive effect to your credit. The second one is amounts you owe in comparison to your total credit lines. This is your credit utilization ratio. As previously mentioned, this may be negatively impacted by a DMP due to your accounts being closed and no longer having that credit available to you anymore. The third one is the length of your credit history. The longer your history, the more positive the impact. The fourth one is new credit. Any inquiry for new credit will reduce your credit score. This won't be applicable to you as you will not have any inquiries for new credit while enrolled in your DMP. And the last one is your credit mix, or the types of accounts you have open. The more diverse your mix, for example, credit cards, installment loans, and a mortgage, the more positively your credit will be impacted. In summary, the impact that a DMP will have on your credit is somewhat complex, so it really is unique to each individual. The good news is that any negative impacts typically occur at the time of enrollment in a DMP, and then throughout the duration of the plan become more and more positive. Ultimately, the absolute best way to improve your credit score is to pay down your debt with timely payments on time 100% of the time. By the end of your debt management plan, you will be debt free, which is the ultimate goal and ultimate benefit. So, how can you get started? You can give us a call at 716 712 2060 to schedule a financial counseling session with one of our qualified counselors. You and your counselor will review your financial situation and determine what debt repayment option will make the most sense for you and your situation, and go over the details of what a DMP will look like for you. Ultimately, we have your best interest in mind and are here to help you. So contact CCCS of Buffalo, your money mentors today, and take that first step toward financial freedom.